Well, welcome everybody to another Pepperstone live event here for, of course, the markets. And what a volatile time it's been over the last couple of sessions and indeed couple of last weeks. Today, we're doing a deep dive into price action flow and, of course, how to get better entries by just really looking more at the structure and the charts. And it's always exciting to go through the live kind of markets and see what's been working, what hasn't been working, and obviously break it down together. As always, I'm joined by Ty and Abella. Ty, how have you been this week? It's certainly been an eventful weekend, and we're already seeing things that are maybe against other people's thought processes happening in these markets in terms of the big moves. Oil down, stocks up.
Yeah, no, well, welcome everybody. Yeah, look, it's been, this year, Tom, this year has just been one of those years, and every week we seem to have something. Look, this was a very, very unusual week. I think that the market as a whole was very resilient, actually, given what was actually happening, and really, it's looking to go to all-time highs. Really, I mean, I think the Nasdaq's already there, but the S&P is trying to push to a new high. The euro here we've got on screen is trying to go to a very recent high. Dollar index is trying to break down. We've got all sorts of things happening. I think with all of the, I guess the noise and trepidation that we saw over the weekend, everyone's forgotten about tariffs, and I haven't heard the word tariff mentioned all week, actually. So that's been a first for the last few months. So yeah, the market seems to have forgotten as well, Tom.
Yeah, the market's very resilient in that one. Obviously, oil going against what a lot of people thought, which would be an upside, and it was probably the most volatile section of the market this week. Well, let's kick things off by talking about currencies for a moment, because I think currencies had one of the better trades on them. And it was thanks to the dollar index, which we'll look at in a moment, the US dollar index coming back up, and a very simple process that we use all the time. So what we'll do is we'll jump on over to another chart here, which has a couple of indicators on it. And I'll just use this so we can get a bit of an idea of where we were at. And what you'll notice is, of course, that we've been in a downward trend. Now, if you're looking at trying to configure price action a little bit easier, always think of it as a series of higher highs and higher lows, or lower highs and lower lows. And basically, when you define a change of trend, something we call the lightning bolt, which is usually a high, a low, a lower high, then a lower low, or of course a low, a higher low, and then a higher high. When you get that on a significant time frame, like a daily, weekly, monthly, etc., it helps you to kind of define that momentum trend. So what I like to do is usually I start with the monthly, and we always talk about this. Even if you're a scalper, even if you're day trading, you should still know where the big flow is. And I think most people would agree. Well, firstly, here we've obviously changed trend towards the downside. We've also seen significant selling recently. So you would say the monthly is down for the dollar. Okay, first thing you would understand. The second one would be weekly, and you can see here that weekly had a high, low, lower high, lower low. So it's been in a downward trend for a while. And then, of course, we go over to the daily, and I think pretty clear that's been in a downtrend as well. So coming into this week, that was helpful, because what that was telling us is that we should be looking more for the short side than the long side, at least for now. And there's a lot of information about everybody going short on the dollar now and everything, and that's true. But at the same time, you go with the price action first. And what we saw, Ty, is we saw this market come back to the 20 daily moving average. But probably more importantly than that, if we strip down the market just to price action, can anyone tell me here in the chat right now, what is this in terms of technical analysis knowledge? What would you usually call this? Welcome as well to many of the viewers. We've got Stuart, Chris, James, and many others joining us. It's great to have you guys here almost every single week, so it's fantastic. So while we wait for that answer, Ty, what have you been your thoughts on the dollar? Have you thought, follow the trend, or are we still thinking possibility of upside if it breaks certain things in the future?
Yeah, look, I think at this stage, I mean, we know that we've been in a downtrend, but we also know we've got extraordinarily strong support here as well. So the market is trying very, very hard to go down. There's no question about that. And any attempts moving up have been thwarted by the 20 moving average, and even the most recent one. It doesn't need a lot of pushing to go down at the moment. And at this level, we've said it many times actually over the last probably month and a half, I think, even in these webinars, Tom, that if this 98 level gets broken properly, it really opens itself down to a move down to probably 96, 95.50, which is a very significant move on the dollar index. Like, make no mistake, like that's
Yes.
a move like that is probably pushing the euro up to about 118, and it has not been there in a very, very long time. So, look, the 20 moving average is doing its job. It's got a lot of work to do to convince us this is going long. I know a lot of people are saying, well, it's only got to turn around, and when it does, look out. Yeah, I mean, it's got a lot of work to do before it does that. It's got to close above the 20 moving average. It's got to close, in my opinion, we have to have a daily close above the 150 level, to really get it to convince me that this base is going to hold. Every time it looks like it's going to go up, for one reason or another, it finds itself back down here at 98. So the amount of every time it gets there, and I think this is probably what we need to point out to people as well. And for those of you who have been following us for many years, you know this. We talk about it all the time. But every time it makes a lower high and even an equal low, the buying is being cut off a lot earlier. The sellers are kicking in earlier and putting pressure on that baseline quicker and quicker each time it tries and attempts to go up. Yeah, generally speaking, a lot of the time it does flush out a lot of the buyers and buyer strength. So eventually, there's a reasonable chance that that base will crash and fall. So to me, I'm not doom and gloom on the dollar index yet, but by golly, it's hard to make a case for it to go long. I think it's just to watch this space. If we wake up in the morning and we've got to close at 97.50, I think it might be just over for this level, I think. And then, we're looking for, that euro to probably move up to that 116, 117 area.
Yeah, so we've got a lot of answers coming in here. We've got fair value gaps, accumulation, consolidation, supply, resistance. I think the good thing is that you could claim it as many different things. And I can see what people are saying about some of those. But for me, this is a supply area. And one of the things that you can always do, and just a good indication to have on your charts, is to have something like a volume profile, a fixed range. And for you to take it from the high to the low here, and what you'll notice is that we get this very clear area of large amounts of trades. And what that basically means is the biggest amount of trading went through this price. And that means that if the price gets back up to there could be what we call a reaction. And of course, that's exactly what happened. And this was an area that I think we spoke about in previous sessions that we've done here for Pepperstone. So you can go back and look at how this has progressed. And we were talking about this level being most likely the zone where the bears would come back into play and potentially short it off. Now, you can see that just by looking at the charts, a lot of candles in a very tight range, because there's a lot of candles, volume down the bottom here has been pretty consistent. So that's going to point towards this area having some of the biggest amount of trades. And this is what we call supply. The reason we call it supply is because the market breaks to the downside. And as it breaks to the downside, it tells you that there were more shorters or more sellers here. And the word for that is basically there was more supply here. It makes sense if you think about
supply demand. What is supply? What is demand? Demand is obviously somebody really wanting to buy something. If enough people want to buy something, what's going to happen? It's going to push up.
I'm not sure what's happened to Tom's voice there. Can Tom?
What? There you go. Fixed. We fixed it. That's a gremlin. You know how there's gremlins sometimes? There's gremlins. How long were we in a gremlin stage for? Sorry about that, guys.
Only for about 20 seconds, but by golly, I was scared for a minute.
Yeah. Well, that'll wake everyone up. Are you awake now, guys? Most people think that's like the Terminator or Darth Vader. I'm telling you what, it is definitely a gremlin in the software.
I thought it was Darth Vader.
No, sometimes I wake up and I've got this this massive kit, this Rode kit for doing this audio stuff. And I tell you what, it literally just turns on overnight. For no reason. No one's touched it. It just comes on. So, yes, maybe there is a gremlin here. Anyway, the gremlin supply demand, but they didn't want us to tell you about it. But now I have. So we've got here, obviously the key zone. And I think the beautiful thing about seeing this supply and seeing this price action is because the most amount of trades went through here. That means that, when it comes back to that zone, whether you're a 1 minute trade or whether you're a 30-second trade or a 15-minute, a 1 hour, 2 hour, a 4 hour, whatever, you will be very interested in this area, and you can start to build a pretty good rep of understanding that there could be a large move there or a large trade. That's exactly what happened. But I think the most key thing here is it was in the direction of the monthly, the weekly, and the daily. And that's a good key. If you've got two of these three, which we talk about all the time, generally speaking, it's going to actually help your trading with whatever time frame you're on. So that's pretty cool here. So yeah, Stuart was on top of that one straight away, and a few others. So this is the dollar. We've Ty's talked about it. If we just go back over to the euro for a second, what that ended up working out to being is a pretty good trade on the euro, and you'll see here again, little coincidence, it comes down to around that area that we've seen the most amount of trade, and then it finds buyers at around that area, and that's of course the trend. The trend is daily up, weekly up, monthly up. So yeah, I don't think that's too bad. What I noticed as well is I did a little sentiment check in preparation of this show, and what I found, Ty, was quite interesting. During the time that this was back down at this level, over 70% of retail traders were actually short the euro. So people were severely positioned towards the short on the euro, thinking the top was in, obviously trying to double top this or something like that. And that, to me, when we were already looking towards the bull side, was actually an extra confirmation. It showed me, I was like, wow, if this does turn on the small time frames now, there's probably going to be a lot of people caught offside. So if you start to think about price action as psychology of the market, you start to think about what you did when you first started trading and investing and what you do now, it may make a huge difference. And you'll notice here it's the same thing. Daily 20 as well, one of Ty's favorites, his best, your favorite indicator, yeah?
Absolutely.
I think. Yeah. And again, simple, but priced with price action structure, in this case, demand. Very, very nice. So I wanted to start with the euro there. I thought it was an excellent case study. And we've seen another
people
one.
Inherently want to go against the trend. Like people always, especially when they start out trading, they always want to somehow not follow the most basic principle in trading, that trend is your friend. It's amazing. It's probably the most simple. And you know what? Hey, hands up. We did it too when we first started. Pushing 17, 18 years ago now. We were always trying to reverse that trend. Be it with whatever indicators we were trying. It's just commonplace, but it's very important to be aware that's almost an indicator in itself. The people will try.
Yeah. The question as well is could it also be considered order blocks? Order blocks a little bit different, but generally speaking, it'll be around a lot of these methods and terms are often around very similar price. So I think you'll find that if you do look for, I'm a big fan of supply demand, areas, but really what you're looking for is where are the orders, and the orders can be shown from a fixed range volume profile. So really you should be paying a lot of attention to that. No doubt that if you're trading, gap markets, that you can also trade fair value gaps, those types of things. Look, they all have a place, but let's keep it simple. We're looking for where the big trades are, and that is the most important thing. Let's move over here to the US 500. This market's probably caught a lot of people off guard. Opens the Monday session down, quickly reverses, comes to a very important zone that I've got marked out here, which was the 60-10 to 60-20 zone, and then proceeds to take that zone out. When that happened to me, the next stop was 6,100, and it did it within 1 day. So the market is kind of squeezing in this situation, and it's squeezed directly into the next level. And Ty and I sometimes talk about options. I can tell you right now that 6,100 is one of the biggest option zones we've seen for quite a while this year. It doesn't matter whether you're looking at today's expiry, tomorrow's expiry, or even like a month away's expiry. 6,100, for whatever reason, has just billions and billions and billions of dollars on it. So I think a very important point, and what this is it's a mixture of technical analysis knowledge. That is that if you go to the left-hand side, you'll see we're back at resistance. Ty mentioned before the NASDAQ, and the NASDAQ's literally the all-time high, so exactly where it would be. So, of course, excuse me. I don't want to sneeze on everybody there, as well as Darth Vader, you all. But this is exactly where you would expect a little bit of resistance to come in. But you can see how fast the market moved to it. And what this is it's pretty much just everyone was caught trying to go short. It reverses it here. And as day traders, you have to understand this is a market that is on the upside. That is, the daily's up, the weekly's up, and the monthly's obviously realistically up long term. So again, 3 of 3 pretty much bullish. And what are we seeing? Bullish action.
Love it.
Yeah.
It's just the 6100. Look, it was going to be a magnet, wasn't it? Like, I mean, it was just such an easy. You could just see it was going to happen. It was going to be incredible for the market actually not to reach it. I think, Tom. I think it was more. There was far more chance that the market, reached 6100 than it was going to reverse on that move once it got the momentum up. And look, for whatever reason, it's there. It is there. For right or for wrong. The good thing, the advantage that we've got. We can talk about all the negativity in the world, about the market. We can talk about tariffs. We can talk about earnings. We can talk about whatever. Price action is price action, and it leads the way. And that's why, as retail traders, we have that advantage to be able to flip on a dime. Had that market gone the other way and started to sell off instead, we had clear targets down at 59.50, 58.50, 57.50, all very, very real targets that could have been aimed for. But because it actually went, price action went in the direction to the 6100, we were able to jump on board on that and take advantage. That's a massive advantage that retail traders have, and never lose that advantage. Always, and what you might say to yourself, well, we're retail traders, we're never going to lose that advantage. Actually, you can lose that advantage, and that's by letting bias and what you think should happen kick into your trading. Don't worry about what you think should happen or what can happen. Look at what is happening. I think that's probably the most advice that we can give to you, to really keep you in line and with what the market's actually doing. Trade what you see, not what you think it should do. That's what gives you the edge. And the minute you deviate from that chain of thought, all of a sudden you might well be a wholesale trader that needs to liquidate positions slowly and move around like a snail instead of the gazelle that we can be as retail traders.
That's right. Yeah. Bias is really bad in these markets when it's not driven by what you're actually looking at. We've got a question coming in here from Eric, and he says, I find it difficult to enter the direction of trend. What's the best way in? We have done a couple of sessions on anchored VWAP. I tend to find anchored VWAP is one of the best ways to get in. Of course, you can use also moving averages and find the one that it's been kind of tapping on the way up. This was a very aggressive trend. Sometimes that's going to require just pure price action and understanding a certain pattern. There is actually a certain thing that occurred here that Taiwan was talking about, and it's a trap. So there is a trap technique here that means that you just enter it based on what you've seen before. And once you've seen it, hundreds of times or thousands of times, you're going to get a lot of confidence for entering those positions. But generally speaking, what I'll do is I'll take the low here, the lowest low, and I'll put an anchored VWAP behind it, and I'll track it based on grabbing that. So maybe I think this one would have been quite difficult from this session, from this particular trade, because you can see here the touches were good, but the problem was that this really became a super buy here, and there was just it didn't come back. It just went bang, 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 bang. Because what happened was it fed upon itself. So many people were short, so many people were offside that it became a squeeze. So Eric, look, sometimes you're going to kind of, in your feeling, you'll have this feeling that, I know it's going to go up, but there's no trade. And you've always got to remember, there's no trade because there's no risk reward that makes sense. Just because a lot of people say, I made a lot today, but what risk did they take? In the financial world, people call it like Sharpe ratio. And most people, if you go to any fund manager, they're going to say, what's your Sharpe? Because they want to know how much risk did you have to take for reward. And that's a very important factor, if not the only important factor that these guys care about, because they're in the business of preservation versus you're in the business of course, making as much as you can to build an accumulation. So yeah, the risk component can be a big problem. But even since when we've got this level here, in the future, if the price does come back down to this zone, this could be a very interesting level for a day trade towards the upside. And what you'll notice is that this also coincides pretty well with that most important 60-20 zone. It also coincides with the most traded level, which is around 6,000. There's a lot of stuff going on there between 6,000 and 60-20 that if the market does pull back, could be an interesting opportunity towards the upside. And that's what you're looking for as traders and investors. You don't actually need that many indicators. What you do need is to think about the market as a storyline and to think about where have the orders been placed. So yeah, US 500 giving us that. I want to go over to oil because this was really risky for a lot of people and still remains incredibly risky. Ty, this market, I think you said the same thing this week. It was okay if you got into it in here. And in fact, this trade down here is very similar to the S&P trade in terms of the bullishness. I don't know, well, you don't ever know why, but actually we were bullish. And if you go back a few weeks ago before all this happened, we were bullish oil. And we changed to bullish oil because the price action told us to. Now, did I know? Did Tyrone know any of this stuff was going to happen? Absolutely, we did not. But the price action was breaking out. And did I expect us to go to 79? Well, I thought we'd hit 72 a barrel. And then we would hit maybe 79 later on. Of course, what ended up happening, and I just want to say this, was we got what we got in terms of what happened in the Middle East. Then we saw it drop down. Then re-escalation occurred, which tends to do this. And on the weekends, we actually hit 80 a barrel. So you can't see it here because these are futures markets, CFDs. But there was actually an 80 barrel as of Sunday, I think. Man, that seems like an eon ago. Was it Sunday or Saturday? I feel like it was a week ago.
It does seem like a long time ago. It does, yeah.
Well, it was a week ago. But I don't even know. I don't even know what it was anymore. No, there's a different one. That's the problem. It started 2 weeks ago, so now I'm confused. But yeah, we hit 80 a barrel here, and then we actually hit that in the extreme futures, and then we've obviously moved down. Now I know for a fact that when we opened on Monday, people that have no idea about finances were saying you've got to buy oil now. I mean, a lot of people were saying that. And I think even people that have nothing to do with finance were saying that as well. And when it becomes obvious to everybody, I think it's a very dangerous fact. And I wanted to go here, Ty, and the reason we brought this up is because let's have a look at the actual monthly for a second. So let's take a look at the monthly. Now, does anyone here in the chat think that monthly looks bullish? Did it make a higher high? No. So it's bearish, yeah? It's in a bearish downward trend. Okay, let's have a look at the weekly now. All right, so you could say that the weekly improved here, okay? But again, it improved before this announcement, okay? All the stuff that happened, it improved before all this stuff happened, and it was only just starting to improve. And then the daily was obviously up. So you have weekly and daily up. Now consider that, of course, the price often, we say if it's in the press, it's often in the price. This is the absolute factor of why that's usually a thing. And where do we find ourselves now? Back at the structural demand, back at the support. So could there be a buy here? There could now that everything's kind of simmering a little bit, hopefully. But do we have enough to see a bid? Hi, what do you think about this?
Yeah, I'm very scared of oil right now, and for all the reasons that you've just said. I totally agree with you that 70. I heard a lot of people actually say, "Oh, I got out too early," because they actually entered when we thought it was a good time to enter, and they didn't. They took profit at 72, 72.50. Look, you should never ever feel bad about taking profit at a level where it should have actually stopped. No one could ever predict that it was going to do what it did. And you should never. The worst thing that you can do is feel that you've missed out and actually try and join in because you feel like you've left $5 on the table. It's the worst thing that you can do. Up to 72 to 72.50 was a very, very good trade. Make no mistake. What it's done now, I would like to see a few more days of stabilization. In fact, I'd like to see the whole week play out. Just let the market stabilize. Is it back to a potential reload zone? Because of the basically sitting on top of that rectangle that we've got drawn there. Absolutely, but I'd like to see it happen over a few days, get some consolidation back in place, and then we could look to potentially get back up to that sort of 68, 69, 72 level. It's still, for me, a little bit too volatile. I just think there's still a little bit too much uncertainty. I saw on the news today that the great president dropped the F-bomb, Tom. I'm not sure if you're aware of that, but he dropped the F-bomb in an interview about the,
I think he went to find some McDonald's burgers after that.
He was very, very passionate about that. And you know what? I actually like that. I actually like to see that passion because he truly is trying to do the right thing by the world. It's not an ego thing. He is trying to actually sort out what was a mess. And you could see he was very, very truly frustrated. You would have to be to do that. To me, that just shows passion that he is trying to do the right thing. Look, you're stuck between a rock and a hard place, obviously. But if that's the case, and that could escalate again very quickly, all of a sudden oil is going to go berserk, right? So I would want to see a few more days of stabilization before we start actually getting excited about an oil trade. I think that's just my thoughts on it. It's one to steer clear of, I think, just for a little bit longer.
So oil needs to see stabilization. Let's move over now to, I guess, the other ones, which are gold, silver. Now, gold, a lot of people would think this has to be super bullish because of geopolitical tensions and everything going on. Obviously, it hasn't done that. I'm still bullish in terms of longer term structure, and the simple answer is why? Well, you might ask. The monthly is clearly up. The weekly is clearly up still. And the daily is actually still up because we still have a high, low, higher, high, no real lower low. We've basically just sat around these levels for now and found potentially a bid zone. So the question then is, do we want to trade it long? And the answer is most likely not. And the reason why, we haven't really seen anything of interest. And remember, sometimes with trading and investing, it's about recognizing when you don't have some form of edge. Now, somebody might have edge with one of their systems here, and they're saying, you know, I know what's going to happen next a certain percentage of the time. But it's okay, depending on what your system is, to not know what's going to happen next at certain periods. And that's really the understanding of you improving in trading and investing. Now, if we are talking about, do we break through 3,400, 3,405 in the future? Yeah, I mean, that's going to be clearly quite bullish. So this would be an area of incredible interest for a change of trend towards the upside, even here on the 2 hour, 4 hour, etc. But for now, really, really tight, just sitting around the support. And we definitely need to see more. And that can be told to you just through the price action. You don't need to make anything fancy.
Absolutely. And I think that, and by the way, not knowing, having certain periods of time in the market where you don't know what the market is going to do next is not actually a flaw in your trading, by the way. We have that all the time. I mean, I think we mentioned it all the time in our webinars, that there are some things and instruments where we have no idea what it's going to do. It could do either very, very easily. And I think gold is actually one of those right now where, you know, if you could wake up tomorrow morning and it could be back at 380 and above the moving average again and starting to look high again, just as easily as it can be below, 3280 and heading back down to 3,000. Neither would surprise us. And I'm not, I can hand on heart say I've absolutely got no idea which way it's going to go, but I can make a very solid case for both. And really the key is just to be able to trade in the direction that it goes to. And I think that's being agile. Again, back to that agility in the market, having the confidence, knowing that once you understand price structure and you understand that there are two gravitational zones that it can go to, you can confidently trade in that direction when it does do it. But would we be having a guess? Absolutely not.
So silver's going to give us monthly up, weekly up, daily probably down at this stage. And it's just had an epic run on it. You guys know, if you've been watching for a while, that we've been pretty bullish silver. That being said, am I bullish right now? The answer is not in this shorter term. And the reason, again, is a series of lower highs and lower lows consistently being made. You've got to argue that around here, the bears are in control at this stage. If you were looking at this price action, you'd say, well, there's more shorts than longs. But of course, they could switch, as Tyron mentions. Again, things can change. 3650 plus, all of a sudden, looking bullish again. So, I mean, I'm probably favoring the upside because two of the three are to the upside. But do I have a trade to the upside now? No. And again, it's easy to be able to make that that move and that question very, very quickly. I'm going to request here for one currency. We'll do that in just a moment. But let's move from silver just quickly over to the cryptoverse, because I think a lot of these are very interesting points. We've seen Ethereum completely dropped through. It's rallied back up. I ask everybody here that's live right now, do you think that this could be an area, considering it's the most traded zone, that maybe bears could be sitting in? Sellers do you think sellers might be sitting around 2,500? There's a possibility, yeah? You don't know it, but what you do look for is your system signs at these areas. And if you're doing your analysis, you're going to find that probably the monthly is probably slightly down on your ETH, daily is definitely down, weekly would be up. So of course, two of the three probably be a little bit more negative. So what are you looking for? Well, you're looking here at how does it interact with this zone. So if we go boom, boom, then all of a sudden you might want to be short. And again, that's not solicitation to do anything. I'm just saying that you can see very clearly when you zoom this out and you look at it, that this is the most traded area. There are so many trades that have gone through there. So as it comes back up into that zone, it makes sense. There could be sellers there as well because it's a heavily traded zone. There's going to be a lot of positions. So if they were buys, what might they be doing, Ty, if it comes back up to this zone? They might close them. So they close the buys. Therefore, when they close something, they sell it. So therefore, you get a lot of sell pressure, don't you? And that's why I think a lot of people don't really think about that either. That's actually what's happening. Most traded zone, they're going to be like, yeah, that was a mistake, but thank you very much for letting us out. And if you're going to take another tip away from today's video, you'll find that the market often does come back to these areas. And the reason why is because, frankly, Wall Street and the algorithms want to get out of their trades. So sometimes they allow the markets to push back up. They clean out their positions, and then all of a sudden it goes off another direction. So again, the psychology of the market becomes important. Now, the real star of crypto is obviously not Ethereum anymore. It's always Bitcoin. And Bitcoin is a little bit different. It could be a very similar case here of the S&P 500. Takes the lows, lots of stop losses taken out, suddenly reverses to a massive upside. We clear like a 108 plus, and all of a sudden, Bitcoin could be 120, 125. So there are very key points coming up here, but it all makes sense. Key point on Ethereum, key point on Bitcoin. If Bitcoin goes first and it says, you know what, we're going up, I probably wouldn't be trying to short Ethereum against Bitcoin because really Bitcoin is the S&P of the cryptoverse.
Yes.
Would you agree with that, Ty?
Yeah, absolutely. Absolutely.
We've got Euro odd now. If you want to run us through this one, what do you think about the Euro odd, Ty? Oh, it's not loading at the moment. Doesn't want us to see Euro odd. There we go. We've got it. Okay. So clearly a little bit of Euro strength here recently, isn't there? Are we at that resistance though? What are your thoughts?
Yeah, look, we're starting to see a bit of higher, low action. There's no question about that. I think that we've got a resistance point with the previous action that we've got there. I would be waiting probably. I would like to see another break of that level. If we get a break above that level, I think we can look for those 184s as the next potential target. But doing all the right things for a break. But there's no question we are at a reasonable level of resistance here. We're seeing all the right things, but there is opportunity to go up.
So weekly up, monthly up, daily up. So clearly the trend is up, and therefore you do want to be looking more at the bullish side. As Ty mentions, probably about 1.8, got some problems. We get through there, all of a sudden we're looking quite strong indeed. And that probably means that you want to be looking at structure as well here. This area here, this area here. If we do something like this, take the low, maybe make a double bottom, suddenly ramp, pretty good. If we come down here and hit that zone and structure and do the same thing, then that could be good. But yeah, you'd probably be a little bit more biased towards the long side here just because it's the monthly, it's the weekly, and the daily. And I think we're going to keep repeating this just to people because what I find is that probably the worst thing I did when I got into trading investing was that I didn't look at the higher time frames. And I was scalping 1 minute, 3 minute, 5 minute, like all you guys like to do, which is totally fine. But what we didn't really pay enough attention to is how do we build a bias that's based on nothing to do with the news, nothing to do with people's opinions, nothing to do with your opinion really, and just based on pure price action. And that's by going through those timeframes, getting 2 of them in your favor and saying, well, maybe if I now go just a little bit more towards that direction of whatever they're saying, you'll be surprised how much better your trading odds will actually go up, at least in my opinion.
No, 100%. 100%.
All right. Well, guys, as always, Ty, I guess, volatility strikes again over this week. I don't expect 2025 to get any easier. As always, if you are watching this over on YouTube or you're watching this in some form of replay, make sure to sign up in the description down below so you can attend these live. Then you can ask the questions that you want to ask. We'll answer them during the session, at the end of the session, etc. It's meant to be interactive for you guys. If you have a question, we'll answer it. And that's the beautiful thing. And we're always hoping to really bring things back to simplification because people go really wild. We had a couple of questions today about, obviously what I guess you would call on the internet more advanced techniques. But at the same time, what you'll find is they all come from the basics. You know, and they all actually still end up giving you very similar zones. So just remember, keep it simple. Stupid is the way I always go, the KISS principle, and that certainly does help. Yeah, and it's really, really good. Ty, any parting thoughts before we end the show?
Yeah, only that next week, guys, there is going to be a webinar break because we do have a live event. Silvio, yeah, we look forward to seeing you too there. Yeah, we've got quite a few people coming from Melbourne. So, yeah, we do have a live event next week for Pepperstone. So just be mindful of that. But I think, yeah, keep volatility still in the air. So just be careful if you're trading. Make sure you keep your stop losses nice and close and handy. And yeah, I think, yeah, trust what you see in the markets. Don't go for longer term moves right now. I don't think we're in that environment just yet.
All right. Thank you so much, everybody. Bye for now. And we'll see you in the next one in 2 weeks' time. Catch everyone.
Thanks, everyone.